All right, so let's talk about entries. Yeah. So you've identified your zone. You understand? Identify your zone, and the market is already moving towards your zone. So what you need to do is to when it gets into your zone, go to the smaller time frame. Go to smaller time frame. The next class we are going to start with IRB, institutional reference point, where you can see areas where the market might react. What are the reference points of the institutions, or we call them BFI footprints? What are the footprints that you look out for in the market for you to take your entries? Now let's deal with this yellow zone that we were working with at the time. Now this was an engulfing candlestick. This is another block at this zone, at this assistant major zone. Now look at the way it is. I'm sure you all can see it here. So this could be your entry zone. This could be your bottom. Anywhere from inside this yellow zone actually could be your entry zone. But you can just refine. So that is where the problem. A lot of things happen when over refining. You miss your entry. Anyway, but it's just that your stops might. You don't want your stops to be too much. That is where people come to smart time to refine. Now this is just like how many pip stops. This is just like
Àmọ́
22 pips.
weekend na the thing
A lot.
time of them nǹkan ọmọ ndé wọlé.
So it's a 22 pip stop is a lot. Okay, it's a lot. So all you need to do is come down here. Now come down here to this point to see if it's going to take the entry. So your entry is going to be at the base of this green candle, because this is an engulfing. This is another block here. These two candles are going to be tested once. Then let's go and see. Let's see what happens here. Let's see how the market came. Market didn't react there. Didn't react there. Now see, it came to that place. To that place. Let me put a line there so that we can identify that our entry point. It came here. It came here. So that will be your entry point. Your stop is going to be above. It's going to be here. So see, like I said, it's not every time you might be making accurate trades. At times your stop loss is going to hit. Now this is just you enter the trade from there. This is just how many pitch stops. It's just 8 pitch stops, which is not bad. This is where what you do, refining your entries, trying to find IRP, general reference point, where you can then take your entry. So that means that you are risking 8 pips. So if you are using one lot size, that means you are risking $80. And then look at it, look at the entry. Now from the entry here, the entry. This was the entry. Okay, that was the entry. That was the entry. Could have hit our stop loss at this point. So probably could have left more space for it. No, okay. This is what we'll be working with now. This is really our new zone on the 15-minute time frame. But that was major zone. It has tested it once. It will hit our stop loss, came back. You see, came back. But the first test, this was the first major test it did. Let's ignore all of this. This was the first major test it did here. It tested it and dropped. If we had done eight pip stops, then it gave us 20 something. That's 1, 2, 3, 4 risk to reward ratio, which is not bad. I've gone out. Then it came back to test the zone again. You are the one that now there must be something else it came to test there. Okay, but for me, I might leave all this space open. Okay, I might leave all this space open and look at the way it kept coming back. It tested this now. This one too now came back to test this other block. This particular other block. I see this other block here. This particular other block here. Came back to test this other block. That was what gave an entry from here. You understand? So that's like three times that zone was tested, or 4 times that zone was tested. And then the last testing, it dropped very well. It dropped very well. You see the way it dropped. Now I made that zone now a major zone again. A major zone that originates an impulsive move, a move downward. And the same thing that I did here was this. Same thing I did here was this. Looking at this now, can you see this? Can you see this? I put my stops at this low here. Some people could have put it lower here, somewhere around there. And then because this was a major move that was responsible for this impulsive move. So this was a minor move or assistant move that happened. So it plotted. So if it breaks it, fine. You move to the next one again. When it breaks it and gets there, you catch it here. So it might not be all the time 100% that. And funny thing is that it's going to react. It might not react too long. At least it's going to react at least minimum of 15 to 20 pips at least. Even if that 10 pips, if it goes to this zone, it's going to react, because any zone that's the closer to the origin zone, the powerful, the better the zone is. You understand? So look at this. When it got there, it triggered and went up. This is almost 15 pips already, and then it went up. And we have, it's possible it keeps going up. Come to this zone actually. This area, I have a feeling I come there, and then can you see? And then so you're refining is you come after you discover or you identify your zone. You come to the smaller time frame to look for where to enter from. That's what you come to do at your smaller time frame. Now look at this place now. We've seen that on our 4 hours. Let's go to 4 hours. Those of you that have been following since you understand this zone, you understand this particular zone, and then you understand this zone, you understand what we're expecting here. When you understand this zone, you understand that zones are origins of an impulsive move. The zones are origins of an impulsive move. As you can see, so they were tested. What can you notice there, guys? Listen, let me show you what. Let me pay attention to something. The first test will test the minor zone. The second test might test the new zone that tests the minor zone, and then the third test will go back and test the major zone. Can you see? This is the same thing. This is the exact thing that happened here. That also happened on that pair. What was that pair that I was on the other time? AOGBP. AOGBP. No. Yes. AOGBP. All right. Was it this? Yes. Oh, let's try to explain the other time. Can you see that this tested this minor zone, right? Minor zone. So it should come back up. It's coming back to test the major zone here. Okay, we're showing that on the 15-minute time frame though. Show that on the 15-minute time frame. How do you know the zone or the market is more likely to react? You were not at the class this morning. You have to be in your zone. You have to be in your zone. You have to be in your zone. You get what I'm saying? You have to be in your zone. So can you see? This was our zone. You see our zone already. Then go to 15-minute time frame. Let's look at these two zones. Then we go to the 2-minute time frame to look for smart entries. There are entries already there. The way I mark my zone, I mark them as an area of entry already. You understand? There are entries already there. So I was going to enter from a move forward that. But you know, to scalp fast and reduce your risk, all you need to do is to just do what go and look for them on 4-hour time frame. I hit that zone one time or twice, but 15-minute time frame I might hit it multiple times. Now look at the zone, and this was the zone here. This was the area. That was the area that all of that was happening here. Coming. Can you see that this is an obvious order block? Okay, could have put this, could have put entries here. First entry there, you understand? But because it looks so far, for me, I would have just pick all these zones, you understand? Pick my entry here. That's why it gave me entry straight away from my 4-hour time frame. Give me entry straight away, then my stop is going to be right above there. But because look at the way it was, this is going to be another. So because you want to refine, that's why over refining can make you miss some of the tricks. Understand? So that's another place of entry. That other block. This is the first. This is the second. There's another one here. This is another one. You understand? I can enter the trade from. And then you refine your stop loss above them. And then if you see, let's go and check how the market reacted to those lines in the future, to those places, those areas in the future. Like I told you, don't trade the middle Don't trade in the middle. Trade above. Don't trade in the middle. Trade above. Trade from hedges. Move, 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 move. Oh, okay, can you see? This is the first one I reacted to. This is the first thing I reacted to. That was at the top first, at the upper place. That was the first place we reacted to, and I see the way it dropped. Now it came back again to react to that place again. That top place again. And then we are lucky that it was that top place we reacted to. And then it dropped for this zone. Okay. Now if we're not targeting this zone, it came into this zone just right above. It didn't go into the inside. Okay, for this one, it went inside. This one just started this one, and you understand what I'm trying to explain to you guys. So you look for entries, look for but by the time I talk about internal reference points, you guys are going to understand better and clearly what I'm trying to say and what I meant by looking for entries. We are going to talk about RRP, internal reference points. So we talked about liquidity, we talked about so many things. So what else, guys? What else, guys? You have any other question before we go for this evening? Or we call it
Okay. Please, the question I have is about that point where the support turns resistance and then the resistance turns support. You were more particular at the point I saw your own. How do you know the ones that get to be respected, strongly? Because I saw 2 slides on your screen on the other last 2 meetings. So, and all those areas, you don't really miss them at all. So I just want to know the tricks, on how you get yours very accurately, because those points at times the price might still have a tendency of going higher to touch zone, like these zones you're explaining, this reference point. But in some cases whereby the thing now respects the underground level, I don't have a screen to show you, but I just hope you understand me, please. The this thing, before even getting that, I don't know if you get, boss, I beg.
Wait, you, coach, can I answer?
Yes, please.
Yes. Not like another language, but like instead of what he's saying. Okay, now, first of all, I was taught that generally that's just general knowledge. When you're looking at a particular pair, you look at what the market is doing overall. Is it a downtrend or a uptrend? Once you've established that, then this market is going down. So what he is saying is that when you want to pick your zone, you look for the candles that are responsible for a impulse movement, either downwards or upwards. Do you understand? So when you find that candle, when you find that point, you mark it. But once you mark it, you know that it is coming back to retest that particular point because it reacted because there are orders. He said there are orders at that particular point. Do you understand what I'm saying now?
Yeah. I'm getting a
So
little.
exactly, you see that when you see a candle, after that candle, the market drastically went down or it drastically went up. That is where you're looking out for action.
Okay.
Okay.
Yeah.
Let me try.
Thank you.
Let me try
Mm-hmm.
to explain again. Okay, man. Let me try and explain again. How do I open a new chart? Okay, sorry, I'm coming. Euro NZD FXCM. Let's see if it opens. It didn't open sharp. Look at this guy. Sure, you want to fucking share here, my nigga? Okay. I'm this is a 4-hour time frame, right? Now, when we an impulsive move is when the market move like on a trend, like maybe downtrend or an uptrend, just moved impulsively. Fear. That's an impulsive move. You understand? That's an impulsive move. You understand? So whenever from the first thing you need to do is to go on a monthly time frame. Understand where is this market? Are we ranging upward? Are we moving upward or downward? Or we are consolidating? You understand? Or we are in a consolidation. Okay. Obviously now, this market look like a market I want to start coming down because it has gone up and then it's already starting to come down from this up movement, making higher highs and higher lows already higher than then this place now, all these movements that happen upward. But where is that look? Where is the origin of the movement? Something that what sponsored the movement? It was this zone that sponsored this movement. From here, this was the zone that sponsored this movement. Now just draw this down and go and sleep. Understand? And wait for market to react in the future. Now you are saying that this is the zone that sponsored it. Came to test it again. Now, if you had seen it earlier on when it was going up, you came to test it, but you might not have seen the movement much. Then now it came to this market, got to this point again. Market got to this point again, to this high point again. Look at this point now. Let's look at this point now. Then you leave it because this was a zone that was responsible for this downward movement. Now look at this too. What you saw this that you know, Shannon, by something happened there. What happened there? Try your zone. You have seen it. And you wait for it. See the way the zone was drawn. Then after this, there was an impulsive sell to the downward side. Market now came back into that zone. Activated your trade with this long candle. This candle was ranging in loss. It was going to be ranging. You didn't reach stop loss. Then it sold. At least it sold for no 20 pips, if I'm not mistaken, around here, or 15 pips. 46 pips actually. Look at me. I'm whining. 46 pips. It's not bad. So that target 20 pips, 30 pips, 40 pips, 50 pips. Don't be too greedy for a start. Understand? And get out of it. And then it sold before going back up again. Now, while he went back up, it would have closed your trade for you in loss here. But if you go to a smaller time frame and you mark all this zone, you know, you could have entered well and then it sold properly again at this zone here, and before it went up again. Okay, so now this place has now become a zone again. This place, this zone has become a secondary zone. Now, when market got back to this zone again, what did it do? It tested this zone. This will have been your stop loss above here, and then it sold down again. Okay, now it broke the zone upward, created an higher zone again. So if this market come up to inside the zone, then you should expect the market to sell. Okay, all you are looking for in the zone is the sponsored, so it's the sponsored area, the origin of that impulsive move. Now, this particular rejection might be an engulfing pattern, might be another block or a rejection also on a smaller time frame. So which could have been your target where you place your entry and the market got to the point, entered it, and then sold downward, then it have been in profit. Look at the same thing that happened there. So now let's move on. Let's move ahead. Let's move ahead. Because I've called this a reference point. Your entry would have been here, good, and then see what market did here. It activated it, went up a bit, didn't stop loss, and sold down a bit, reacted at every major zone that sponsored a movement. Market will react there. How long the market will react, we might not know. This is another place where the market saw and experienced, where the market sponsored a downward movement. Market sponsored this downward movement, right? As you can see it here, sponsor this downward movement. here. This could have been, this is where your entry would have been, either at this place. I like to play safe. Well, deactivate it because of spread and all of that. But imagine that you were just give a little breathing space for it to come down a bit more. And then let's say it got activated, it dropped, it reacted. This is not less than 20-25 pips before it continue moving upward again. You understand? Now, this particular touch here, there is something that this particular reaction here, there is something that it is reacting to. It's first reacting to this major zone that sponsored this major, this all this down movement, that sponsored all this down movement. This zone was the one that sponsored all of that down movement. Understand? You could have put your own stuff here now. You could have put your own entry here, and then because of that other block, and then it didn't get activated. To be painful, you understand. So now this is a major zone, and then now we have a minor zone here. We have and your first minor zone is always as strong as your major, zone. The less a zone has been tested, the stronger it is. The more it has been tested, the bigger it gets. Okay, right? Now look at what this is now. This has become another entry for us. Now every time market came into this zone, it tested it and so the first time tested it and stood and gave us, even if we entered from here, stood and gave us 128 pips, right? Second time it entered again into the zone, came here into the zone again. You have entered from here. We had entered from, excuse me. If we had entered from here, came down here, at least 172 pips, which is not a bad idea. It has been tested twice, so we should expect that it's possible for this market to not hold again by the time we started going back to that direction again, because the test started already, and then the more you hit an hammer or something, the weaker it gets. You understand? And then it went up, trying to target something from here. If you go to a smaller time frame, there might be a national reference point that this market has reacted to here. Could be this rejection candle that the market has reacted to here. Now let's check it. Let's not assume that it might be there. Let's see if it is there. Is it there? Is it not there? Follow me. Let's go and check with our own eyes and see what has happened there, so that we can understand what is happening in the market. Okay, why is the market reacting the way it is? Is the market straight or gay? Is the market a man or a woman? Why is it misbehaving that way? Why is it doing up and down? All these are the things that you're going to pay attention to while you are watching your market. Because for every candle that prints in the market, there's a reason. There's for every action, I don't know how they used to say that. I'm not a science student. There's a reaction. So for every action that you see in the market, it is reacting to something. Something is reacting to it. Either of the two. So your own job is to find out what is the market reacting to. What is the market reacting to? So where is it now? Well, this is our entry first. I don't know where all of my stuff is not loaded, but this is our first entry zone. Let's see. Can you see it here? It touched it. It touched here. This is another block here at this zone. So it could have been an entry, and up here could have been your stops if you are trying to find the refined entry, right? So let's see if the market got there in the future. Let's see what the market did with it in the future. Why is this thing long? Why is it far away? Why is this? No. Am I in the right direction like this? I'm lost. I feel lost. Oh no. Not like this, doing this to me. Okay, we are here. Can you see? Can you see? Can you see? It came to test it straight away. That other block, you see that it activated it, I'm so sure, and it didn't stop loss. Because I can't be going that far again. But can you see what it did? This is the major zone. Then this was the primary, secondary zone that came after it. Still, market came into it also twice. First time, this was the first time, came down. The second time, yeah, entry. This was the third time again. No, this was the first time. One, second time, came into it, and then it sold down. Then it became an origin. The market was reacting, and market reacted to those points. So market is going to always react. Your own is that's why I said when I teach about the additional reference point, it's supposed to be, I mean, you will have watched it because it's supposed to be ahead. I'm supposed to teach it first, but I'm going to put it ahead of the class. You understand? You will be able to see all these things clearly. You'll be able to see, to know the things. A pin bar, is it a pin bar you are reacting to? Is it the pin bar? Is it a reaching pin bar or a rejecting pin bar? Is it an engulfing pattern? Is it an order block? What are you reacting to? So those are the things that I'm going to be explaining to you later in the future. Look at our buy. My buy, I said I entered and still buying to the glory of God. Okay, so that's the way our buy is already dropping. But let's see. Like I told you I didn't trust this buy. So let's see what will happen. I have a good thing that is going to keep selling. So I believe that is all right. That is it, right?
Yeah, that's all. That's all. Thank you, sir. Sir, but please, I want to remind you in case on our next class, like you're planning, I don't know if you can give us a set of your risk management. I think that's a very strong